are probably 15 to 20%. And the way they're doing it is with contracts that we have with the city, state, and corporate America, doing factoring for our office. So that's able to help our members be able to get contracts and not say, oh, they don't have the right banking credentials. You saw Pat said that. Oh, they're not bankable. We're bankable. If you get me a contract, I'll get access to capital to my members. We have done that, and we've been successful. The Women's Chamber has done a lot to do that. They're getting funding directly to these small minority women-owned businesses that are not just Hispanic, that are women all over New York State. So those type of programs that we need to support and fund, and the local advocates feel that we're not getting enough support probably from government that we desperately need. Our businesses are going under. Joe Cochalo had a big contract with Skanska. I think you heard about that. Went under because he couldn't get capital. And then the state made, the dormitory made him do more time, and the unions, he went under. And so, and this was the top Hispanic furniture company in New York State. So if Joe Cochalo went out of business that I've tried to put my business, imagine other businesses. And our members feel very hopeless at this moment.
So he went out of business because money was owed to him, and he was...
Yes, he was owed almost a year and a half thanks to Berta Lewis, and Senator Sanders and other senators were able to jump in, get him paid, but it was only a penny in the dollar. So it didn't pay all his old debt. He went out of business. And so he was one of the best MBE. You ask the school construction authority or any of the state agencies on CUNY, they loved his service. And you know, it was Skanska that put him out of business
because of they
didn't pay him on time.
Pay him. Right. See, and again, that was part of what I was trying to get at with Mr. Mackerel when he was here. Is we seem to have this willingness to extend money to people that have no business history and no income and no credit history, and say, okay, here you go, here's your first loan, and then get them kind of in the pipeline, so to speak. And now you move on to your next project, which could be a job with Skanska. And now we put you back into a position where you literally run out of business because the GC is not paying the sub, and you happen to be the sub. And so we've now created this environment where you're actually at a loss, and it doesn't seem to make much sense. And that's a perfect example. Mr. Gardner, you represent the New Albany chapter of the Association of Minority Enterprises. So are you seeing the same sort of experience, nobody really being able to access money through the New York State Banking Development Corporation?
Absolutely, and I could add one more point to it. I have a client that did get a loan through NYBDC, and I wish again our friend was still here, but he said that there was no requirements for assets or collateral, I believe the term he used. But the client that I did, they were able to get a $250,000 loan after going through rigorous hoops, and we did get the loan for $250,000, but they took as collateral all of the assets. So they had $1 million in assets in like 3 different properties. So you had one property, let's say, was at least $300,000. They took that, their primary residence, and additional residence income for $1 million in collateral on a $250,000 loan. So, so that was directly contrary to what he just said here about they don't necessarily do, unless it was something that changed. So it could have been a change in venue, but the experience I've had when we did it, that's what happened. And when you go into talking to the banks, there's a total disconnect. I mean, we got to get back to banking where you get to know your banker and they get to know your business and the relationship and your kids playing ball and that kind of thing, because this particular format is not friendly to the constituents that I'm working with or the people that I see on a daily basis. So the guy that's sitting at my desk or in my office or something is not having that type of experience.
And so how many times have you applied now to become certified under myriad groups of programs?
With the banks, I must have put in 5 different applications. Sometimes I would just call and they would be kind enough to not put me through the weeks of preparation and just say, no, we're not interested. But
And so let me ask you a question. So if you were to walk into a bank, and one of the three of you, and say, you know, I'm a new business, I'm registering with the state as an MWBE, and I'm a startup, and I want to apply for capital. Obviously, we know the big banks aren't doing this. Do they, at that point, does someone refer you to, like, the Business Development Corporation, or to, so if you walked out, if they just said, no, you're not creditworthy in our estimation because you don't have the collateral, you don't have the history, you don't have the payroll, you're not someone that we want to extend credit to right now because of the risk involved. Is there anybody at that bank that says to you, by the way, we provide X number of dollars through the New York State Banking Development Corporation, here's information that could be helpful to you?
I have seen the local credit unions are the ones that are
they're coming
lending.
up next, but I'm talking about banks. Not,
I'm just saying,
right.
they're the ones that are lending to the community. And so some of the unions, DC9 is helping through the credit
Right.
union, through the chamber, to fund some of these MBE contracts.
Mm-hmm.
So we are looking as advocates how I don't depend on an organization that's controlled by the banks that have no minority on their board. They don't have no outreach to us.
But I'm trying to get to the really specific question. So if you walked into, because if I never knew anything about access to capital and MWBEs, and I just wanted to start my own business, and I needed money, my first, I always think of myself and my own constituent. The first place I would go to is my bank. People that have my money, right? Which happens to be a large bank. I'm not going to mention the name of it, but it's an international bank. So my first thought would be I would walk into them, and they would likely say to me, Senator, we appreciate your business, but you're not credit worthy for this loan. But at some point, one would think they would then say, but here you go. Here's where you can go, and that doesn't seem to be happening.
That's
So.
not my experience.
My
Right, so
experience either.
that's another place where we need to raise awareness. The banks themselves, because they feel it's important enough to provide the funding for the New York State Business Development Corporation so that people can get access to capital. But if no one knows about this, what good is it? That seems to be one of the problems. I want to thank the three of you for sharing your experiences. Senator Hamilton, do you have any questions for them?
Yes, ma'am. Yes, Madam Chair. Can you hear me?
Yes.
Yeah, I just want to say thank you for coming here today. I heard the previous speaker, Patrick Mackrell, and also I heard you three speak today. And Mr. Garcia, I know you. And so since I don't know Mr. Cantrell, I can only go on what you're saying. And I know you are truthful in what you're saying. You're passionate about what you're saying, as all three of you. And it's disturbing that he left. And it's disturbing that there's really nobody here from the banks. They can't just take their responsibility and give it to an organization and say, you deal with it. So I would like to ask some questions, and I would also like to sit down with you three and figure out ways how we can create legislation, or figure out ways how can we make the process fair for everybody. My mother started the South Bronx Federal Credit Union, and I remember she was passionate about it, and people really defaulted on their loans. So it could be a perception, it could be stereotyping of who can pay, who cannot pay. And people were so appreciative of getting money to start their small business that they would make sure they would come back and pay it. It was like religiously, because they wanted to expand their business, so they wanted to pay their bills, and I think there's a misconception on who can pay, who cannot pay. So hearing your testimony, I'm convinced that the bank's not lending. What the previous person spoke about, he may be lending, but he's not getting it done on the ground. And a lot of small business owners have to go out and get money and pay a high interest rate, and continue to pay a high interest rate. So we have to figure out how to streamline the process and make it more transparent. Because I guess it's a good old boy network that we have to break up, and we have to figure out ways how to do it and make it sustainable. So it's not like it happens in 5 years, everything is good, and then we go back to business as usual 5 years later when we're at, when I'm not around and somebody else is not around. So, Mr. Garcia, you spoke about the pension with 1% the state and 1% the city going towards minority and women business owners. How would you define that from the pension fund?
That's a brainchild. That's Berta Lewis. I'm just here as her
Right.
her cheerleader to say, this is something that we need. Berta came up with a brilliant idea. If we put 1% in jails, then a lot of that pension, 1% goes to put Hispanic and blacks in jail. Why can't we use that for economic development in our community to fund minority businesses like are here?
Right.
So the details, Berta could give you more on that. I know that I'm honored to sit on her advisory board with all the different minority bankers, and there is a lot of bankers and financial institutions that are minorities. And so that's why when people like Pat says, I can't find them, or I can't, you see his office, you don't see minorities there.
Right.
And so the 1% to me is very important to be able to come back and have organizations that work with the community to fund our community. We've been giving the big banks the power over our destiny of the MBE community. We need to take our own, like Berta tells us, we need to take our own destiny and be able to give funding to our community. And I think that your mom was a banker in the credit union. She took the destiny to invest in our community in the Bronx that desperately needs. That's what I think we need with this 1%.
Right.
All the details, Berta could give that better than I do.
And with Mr. Thank you, Mr. Gardner. Yeah, I like, but the 1%. I'm just trying to figure out. We can go to the pension and get more money.
But that's 1% is for investment. This is about loans. So
Okay, I'll talk to you offline. Bertha. So I like the idea of giving money to small business owners who hire from the community. And it's also economic development. You hire, they spend, you hire more people, they spend in the community. So, I'm not sure about the bonding process and the certification process, the barriers that are being put there. You spoke passionately about it, but I don't know the criteria for the bonding. I don't know the criteria for the certification, but I was upset for the collateral that you had to put up $1 million for $250,000. To me, that's ridiculous. So.
I had much the same experience.
Had same experience? And this is from the New York State Banking Development Corporation?
Yes.
And I'm sure, and so I just wonder if that's the same criteria that's used for other people who are borrowing. They have to put up a 4-to-1 ratio of collateral for the loan that they're getting. As far as, so I need to look into that also. So I have a lot of questions, but we don't have a lot of time. And I'm assuming all of you work through Bertha Lewis, through the Black Institute. So I guess we will be having a meeting off-site about that, on how to introduce legislation. Probably won't get it in this session, but for the next session, and have all our ducks aligned in order to make sure we expand to minority business owners. Because I believe we can reduce the prison population. People won't have to live in shelters, and people want to work. Yeah. Most folks want to work. They just need to be trained. And also bridge the gap where the students who are going to high school can be trained in your organizations, in business, with subsidies from the state. So when they do graduate, it'll be a seamless transition with jobs. So I thank the chair for having you come here today. And I just wish next time we can have some banks, like banks, real, big banks come and represent themselves and tell their story. And hopefully we can have a meeting, Madam Chair, in the city where the heart of the business owners are, where the heart of the bankers are, so they can't say, oh, I couldn't go to Albany. You're like 3-4 blocks away. You can walk over here, So that's all I have to say. Thank you, Madam Chair. Thank you for coming today.
Thank you. Thank you, Senator Hamilton. Thank you. Our next presenters will be from the traditional lending institutions, Mr. Amir Kirkwood, who is the first Vice President, Business Development from Amalgamated Bank, and Mr. Tristram Coffin, CEO of Alternatives Federal Credit Union. Do we have testimony? Do we have Do we have testimony from? Okay. So we are at the 3/4 mark, I think, in this hearing. So here's a suggestion. You don't need to read your whole testimony if you haven't, because we want to save time for questions. So, Mr. Kirkwood, if you want, you can go first, or Mr. You want to go first?
Absolutely, thank you.
Okay.
Good afternoon, and onto your point, I think I will abbreviate this
Thank you.
significantly and focus in on some of the comments towards the end that talk about what the key thing I want to really get across, which I think has come across a lot today, that the challenge is that there's a gap between what traditional institutions are doing, what alternative groups like NYBDC are doing, and what's really necessary to understand.
Pull the mic,
So the folks-
yeah, a little closer to you, so.
And to truly understand what is needed for small businesses, and particularly minority and women-owned businesses, to actually be able to access credit. You know, one of the critical things that has been raised today that you can't say enough is that there's a perception of risk often of what a business has, and then there's a reality of risk. And what I think collectively a lot of the institutions have failed to do is to find ways to bridge that gap between what is it that I perceive as a risk and what is it that's actually a risk. Now, in all honesty, there's times when you do get to that point, as Pat did identify earlier, where at the end of the day, they're just not a borrower that you can ultimately lend to. But there's often, because there is not an effort to sort of really find a way to bridge through that, there's plenty of borrowers who are left on the table. So the things I wanted to just focus on was really associated with that, where for me, sitting in the seat as a banker and amalgamated, we sort of feel that collectively, banks, alternative lenders, the government can address the issue of these gaps. Number one is, and this is something more particular to the banks, and I know this is an issue that the state legislature and the governor's office have been a significant advocate around too, is getting to the point where we differentiate between how community banks are treated from a capital and regulatory perspective and how larger banking institutions are treated. So if you are a community bank sitting in Albany, you're sitting in Staten Island, you don't have $100 billion of assets that you're looking to manage. But you have a regulatory requirement that's often having to hire the same amount of lawyers, hiring the same amount of compliance officers, having to maintain capital on your books. That is essentially just money that does not go back towards living at the end of the day, because you're paying expenses in the organization. There was a letter from the superintendent of the Department of Finance that was issued in 2012 to the joint regulators in DC that really brought about this point that if we can get to a point where community banks across the country are able to be treated as community lending institutions and treated from a capital perspective as if their number one responsibility is to lend locally, we would go a long ways into helping to improve the amount of credit that runs locally to communities. It's a bit, not to use too strong of a word, but it's a bit presumptuous to assume that Citibank and JP Morgan and others as global institutions can be as effective lenders as community banks can. So it's just getting to the point where we align the capital back at the community level so that you get that outcome. Secondly, engaging in new models of financial technology to support online lending. We hear a lot about the online lending financial platforms and how they're using fintech. What we're hearing on one side of it is, yeah, business loves it because the access to capital is almost immediate. I got online, I put all my information in, I gave them access to my bank account. And within 24 hours, I had $250,000 in my bank account. And then I also had a 70% APR associated with that. So access is great, you know, the cost is punitive, it's zero essentially. One of the things though that these online lenders have gotten down right is the more and more information you actually are able to understand about the client, the less and less you have that gap between the assumption of risk and the actual risk. The problem is financial institutions, the traditional financial institutions, aren't invested in getting that level of research and data and information at the level that the online lenders are able to do. And I'm sure credit unions, others who are right on the ground also don't have access to that. So if there's a way that we can sort of support getting more access to information on small businesses, we actually can improve we can reduce the amount of noise between the actual risk and the actual borrower's ability to perform the loan and performing the business. The third thing, and I think this is a huge thing, not just from my seat at Amalgamated, but my history. Prior to Amalgamated, I worked for a small business advisory firm that did a lot of work with community development financial institutions. Prior to that, I was at Citigroup, where I was the banker for community development financial institutions. I think that the state has probably, Tristan, close to 60 community development financial institutions, 70, who do on-the-ground work every day, working with the low-income population, working-class populations. They're engaged in housing, small business lending. They're the ones that do the lending to minority-owned businesses. They're the ones who are taking advantage of the programs with all the contracting agencies and finding ways to lend. Again, it gets to the issue you raised earlier regarding our banks maybe offloading a bit of their responsibility. But in terms of partners, if you're going to do it, I'd rather do it with a group that says 60% of everything I do by mandate has to service low to moderate income communities than to do it otherwise, because at least I know the dollars are being utilized effectively. So I think, and one of the things that Amalgamated Bank believes is that we advocate for support of creating a community development financial institution model similar to what the U.S. Treasury has that allows for a real set of partnerships to be built like you see at the federal level where banks work with the Treasury. We're all held accountable by the Treasury. The CDFIs are held accountable for their work by the Treasury. The state has the opportunity to do that here in Albany as well. So I think that's a third thing that's really critical, and a bank like Amalgamated would be 100% supportive behind that, advocating for that type of activity as well. And finally, it's just, again, closing the information gap. If we work on the regulatory environment, we work on CDFIs, we increase fintech, we really do create, I think, an opportunity to.
Can you repeat that? You said fintech is.
So financial tech. I'm sorry, I apologize. So financial technology. When you hear people refer to the on-deck capitals or Linvest organizations, you often hear them say it's fintech, but it's really just about a company that's created a data algorithm, and they're not really even. They'll even say they're not really lenders. What they're doing is just sort of analyzing a customer, borrowing from somebody else and lending through, but they do so at user rates is what the model is. But I think that if you partner a bank with a CDFI, take advantage of those same things, you can actually deploy more capital to small businesses.
These are the acronyms.
So community development financial institution, which I'm going to pump to you.
Okay, that's fine.
But I think that those are the critical things, Madam Chair, that I think I wanted to make sure we covered it here, that as a bank, Amalgamated does believe that we have a role in a partnership with the state, with small businesses, with nonprofits like community development financial institutions. We're committed to that as much as we were committed to fighting for the $15 minimum wage, because we believe it's in our DNA to do so. So what we are open to is suggestions on how to be a leader in those advocating for those issues.
Thank you, and now we'll hear from Mr. Coffin, and then I'm sure you guys will be happy to answer questions if we have them.
Absolutely. Good afternoon, Chairman Savino, Senator Hamilton. Thank you for inviting me. In respect for your time, I will abbreviate my remarks. My name is Tristram Coffin. I'm the CEO of Alternatives Federal Credit Union in Tompkins County, New York, and I'm here to speak on behalf of the New York Credit Union Association. The association serves approximately 300 credit unions across the state, and like Alternatives, they are dedicated to giving people a helping hand up the financial ladder. So we've heard today that for women and minority-owned businesses, getting loans is more challenging than ever. And this is important work, and so we commend and appreciate your sincere interest in getting more capital into the hands of underserved minority and women entrepreneurs. What can be done to address this problem? We have firsthand experience with the challenges and opportunities of making small business loans in general and loans to minority and women-owned small businesses in particular. In fact, more than 53% of our business loans over the past 3 years are made to minority and women-owned businesses. And with appropriate support, Alternatives could lend even more. The experience of Alternatives and other credit unions shows that more can and should be done to make more loans available to qualified minority entrepreneurs, but there are no simple solutions.
Any effort by the state to encourage greater small business lending in general and more loans to minority entrepreneurs in particular must take a holistic approach. So the association believes that any initiative must include greater funding of lending programs designed to help community-based lending institutions make small business loans, including an appropriation for the New York State CDFI fund. Programs tailored to meet the unique challenges of aspiring minority and women business entrepreneurs, an appropriate division of labor between government and local enterprises, and of course credit unions as full partners in any small business lending initiatives. We got our start making women and minority-owned business loans by participating in Empire State Development's Minority Women Business Interest Subsidy Grant Program. Through this initiative, the corporation subsidized loans made to minority businesses by supplementing the interest rate paid by a borrower. And the subsidy provided a cushion to the lender in the event of default and provided our members access to funds that they weren't getting from commercial banks. The program was a win-win, provided access to loans for minority and women-owned businesses while providing lending opportunities for credit unions like Alternatives. Government funding absolutely made a difference in Alternatives' ability to offer loans like this one and made it a more fiscally responsible proposition for the credit union. Ironically, the program under which we made these loans, which provided the interest rate subsidy to add to a 4% loan, actually ended in 2012. However, because the program is so successful and so congruent with our mission, we've continued making business loans for 4% interest without any subsidy. The demand for our services is sufficiently large that we could do a lot more if we had greater capacity. Of course, there are stories behind every one of the loans we make, but a prime example of how community-based lenders can work with government to expand lending opportunities includes the story of Eve Cidery and Autumn Stoschek, who got started in 2002 growing fruits to make hard cider. She started the business with her savings from waitressing, and friends and family both labored alongside her. Her first loan with Alternatives was supplemented by an individual development account, which provided matching funds to augment her savings. As her business grew, she needed a line of credit. For the banks, her business was too small to be worth their time, but the credit provided by Alternatives has helped her business have the liquidity it needs to meet unexpected challenges. So discussions of small business lending to minorities often center on prodding the larger banks to do more. And while this is understandable, given the amount of money they have at their disposal, the potential of smaller institutions should not be overlooked. By targeting lending programs to specifically assist community-based lending institutions, including true community banks, community development financial institutions, and credit unions, it is possible to help lenders truly committed to helping small businesses grow. After all, smaller business loans are often part of smaller institutions' business model. The loans Alternatives makes average around $25,000. So the businesses we help, while successful, are not the type of venture capital startups that are going to promise hefty future returns. So businesses like Eve Cidery would have to grow much, much larger before becoming attractive to larger banks, whereas institutions like Alternatives consider loans like these to be one of the reasons we exist. Our experience shows that microloans are often what women and minority business owners need. These types of programs and the one-to-one coaching necessary to help borrowers succeed is much more effectively delivered at local scale. It's crucial that any new programs include credit unions and other community-based lenders. We don't need to be prodded to do more. We are here to help. Please give us the opportunity to do so. As we consider ways to make small business loans available to a more diverse group of people, policymakers should consider not only how much money to allocate, but the manner in which these loans are to be offered. We don't want a two-tiered system in which poorer small business applicants are stuck using antiquated application procedures, while persons who live in better-off communities have a frictionless banking experience. The excesses of many online loans notwithstanding, the internet is where business lending is headed. A couple years ago, Alternatives teamed up with Cooperative Federal Credit Union in Syracuse, and with a grant from Empire State Development Corporation's CDFI Assistance Program, established a portal for members to apply online for small business loans. And as a result of our collaboration, members can now apply for loans online, and a system-wide CDFI network portal is in the works. Alternatives' experience is consistent with the finding of research performed by the Harvard Business School, which indicates that technology platforms are particularly beneficial to minority borrowers who are less likely to have had previous experience going into a financial institution to ask for a loan. Another key component of a successful program must include mentoring opportunities. Alternatives offers free classes for persons who want advice on running a small business. 65% of the people who attend these programs are women. One of them was Hannah Wortman. To make extra money, she started cleaning apartments while she was in college and became more and more intrigued about starting her own business. She attended the classes offered by Alternatives, where she got one-on-one technical advice from a coach on the nuts and bolts of running a business. And today, Nitty Gritty Cleaning is an incorporated business, and Hannah just hired her first employee. This anecdote is consistent with studies suggesting that aspiring minority entrepreneurs lack access to the type of networks that other entrepreneurs often take for granted. Women and minority business entrepreneurs tend to not only have less access to capital, but also are more dependent on family and friends for help in starting a business. And mentoring and networking opportunities can help expand their support system. To maximize the efficacy of lending programs, government has to let lenders do what they do best, which is to underwrite loans. One of the things that most concerns the association about the proposal being considered at today's hearing is that while there needs to be more government aid, we don't need more direct government involvement in the lending process. Underwriting is a skill, and business loans come with even greater risks. Furthermore, putting the government in direct competition with lenders, many smaller institutions may have no choice but to stop making small business loans. There's a very real risk that this approach will not create a larger market for small business loans so much as make it more difficult for women and minority business loans to be made in the private and nonprofit sector. A much better model is the one Alternatives used when it started making small business loans. Alternatives would underwrite and make the loan, and government would subsidize it by paying a portion of the interest rate. Alternatives has also made use of loan loss reserves and credit enhancements to support business lending.
Excuse me.
Yes.
Alternatives is an organization?
Is a federal credit union, is the organization
Oh,
of which I'm
sorry.
CEO.
I'm sorry.
Thank you for clarifying. Most critically of all, to support the network of existing community lenders making business loans to the most underserved markets, an appropriation to the New York State CDFI fund, as Amir suggested, would offer CDFI credit unions, banks, and loan funds the opportunity to build their capacity and provide more help to the small business owners who need it most. As the legislature focuses on small business specific areas where small business lending for minority and women-owned businesses can be improved, it should not lose sight of the fact that there are many things that can be done that would help credit unions help small businesses. For example, right now credit unions are prohibited from participating in the State Banking Development District program, even though the purpose of this program is to help underserved areas gain access to financial institutions. The Assembly has repeatedly passed this legislation, and we urge the Senate to do so as well. So thank you for giving me the opportunity to speak with you today. Credit unions were created, as you know, out of a recognition that not everyone has access to equal banking services. And we are very ready to work constructively with other stakeholders and the legislature to make sure that New Yorkers can get all the loans they need to start and grow a business.
Thank you. I see we have been rejoined by the good Assemblywoman. I just have two questions. Credit unions, generally you're not allowed to do commercial lending unless they're members. So these people who would apply would have to be members of the credit union themselves.
That's correct.
So do you have a sense of how often credit unions are extending credit to members who are becoming entrepreneurs? Is there any way, and what types of businesses are we starting? Because traditionally members of credit unions could be, municipal employees or state employees or pick something, I don't know. But I mean, do we see a trend in certain types of entrepreneurship?
Yeah, I mean, credit unions obviously come in all shapes and sizes. So there's as many different types of dreams as individuals have about getting into business. That's how many different kinds of business loans the credit unions make. But generally speaking, we're serving the smaller, more, I would say, mom and pop lifestyle-based businesses that are kind of below the radar of what banks would traditionally consider a small business loan. I mean, at Alternatives, our average small business loan is about between $20,000 and $25,000. So that's well below what what banks would consider as being a desirable market niche for themselves. And so we're meeting an unmet need and serving disproportionately underserved women and minority entrepreneurs who often just need a small loan of that size to be able to get themselves started. That said, we do offer, my organization, we offer commercial mortgages as well. And two of the largest business loans we have on our books, one is to an African-American man who started as a tradesperson and kind of worked very hard, worked his way up, and now is in the business of renovating and building commercial space in Ithaca. Another is a very successful and popular restaurant where three of the three owners, two are minorities. So comes in all shapes and sizes.